My name is Larry Beam. Welcome to my home. I am a pastor in the Arkansas River Valley, and I have been for the last 25 years. I love studying the Bible and I love teaching. I also love commodities, so it was a natural thing for me to start wanting to teach other people how to trade commodities. It's a very profitable business, very exciting business. I think you'll really enjoy it. So let's just go to my office and let me show you on the computer what I do. Welcome to my website and what I think is the most exciting business on earth. I want to introduce you today to my business and why I think it's so exciting, and I think you're going to find it exciting too. Let me start out by showing you two silver dimes. These are silver, pure silver, the way they used to be made. In 1945, you could buy a gallon of gas with those two silver dimes. I just filled up a while ago, and it was $3.80 a gallon. Now, you may find this hard to believe, but I could still buy that same gallon of gas with these two silver dimes and get $1 back in change, because one silver dime, just the silver content in it alone, is worth $2.40. So two of them's worth $4.80, the silver. That buys me a gallon of gas and $1 change. So if you look at it from that perspective, gas is cheaper today than it was in 1945. The reason is this, that silver is a commodity. Gasoline is a commodity. Commodity prices have a tendency to go up. Commodities are different than stocks. Stocks is the interest you buy in a company. They sell you shares in a company, so you buy a stock in that company. A commodity is what these companies use to produce their products. And a commodity is something that the earth produces or the earth sustains. An example would be silver. The earth produces silver. The earth produces gold. But the earth also produces grains like wheat and corn and soybeans. It sustains things like livestock, cattle, hogs. It also produces things like oil. These are all commodities. And the commodity market is much, 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 much larger than the stock market. Most people don't realize this. And there's a lot of money to be made if you know what you're doing, and it's really not that hard to learn how to make a profit from the commodity market. Let me show you another trick of our trade. It's called the Commodity Trader's Almanac. And this little book right here tells us what the commodities are going to do. Let me give you an illustration. Every year, at a certain time, farmers plant corn. Well, we know when that time of the year is. We know how the weather is going to affect it. We can see government reports and we learn whether or not they planted more this year than they did last year. We can see government reports and find out what the demand is for corn right now. Commodities are controlled by supply and demand. And when you know that the supply is low and the demand is high, then you know that those prices are going to go up. There's ways to follow this. There's ways to profit from it. It's not difficult. You can learn it. Now, I'm going to turn around just for a moment and go to my computer and show you an example of exactly what I'm talking about and how much you can profit by trading commodities.
All right. Right now you should be looking at a blue and black screen. This is a seasonal chart for cattle. Everything in the commodity market moves by seasons. They're controlled by the weather and supply and demand. And this is a chart for cattle. And if you'll notice, I have drawn a yellow arrow pointing down to June the 20th. And according to the Commodities Almanac, cattle start to move up in price on or about June the 20th. And according to this chart here, this has happened every year for the last 20 years. That's what this chart is. It's a 20-year seasonal pattern for cattle. Now, if that's all the information you had and you were dealing with a broker, you'd already have more information than most people have. You would know that if you were going to get into this market, June the 20th, right around that time, would be a good time to be considered getting into the cattle market. But that's not the only information we have. I would never get into the market just based on that information alone. So let me show you another couple of tricks here. I want to first show you a price chart. This is a price chart from 2005 to 2010. Each one of these little marks is called a tick. And these ticks here represent 1 month of what the market did. If you'll notice, in 2005, the cattle market went up, came back down. Again, after it went down so far, it came back up in 2006. Did the same in 07 and 08, 09, and 010. Year after year after year, commodities go down and they come back up. You know, everything that goes up has to come down. But the good thing about the commodities, it's going to come back up again. We're always struggling with supply and demand when it comes to commodities. You know, they're just there's always a bigger demand because the population grows or because of the weather or whatever, several different factors. So you just need to realize that commodities move by seasons and by supply and demand. That's a very important element. Now, again, these are called ticks, those little marks are, and these are monthly ticks. Now, let's move on. Here is a daily tick. And if you'll notice, I have drawn a green arrow pointing to June the 11th. Well, we know June, the last part of June, is the time for cattle to start running, so we're going to keep an eye on this. Now, I have two violet red lines drawn there, which is a channel. It's also known as a consolidation period. And the cattle market is consolidating in a channel right here. Now, we need three things before we jump in this market to take place. Just because we know it happens around June the 20th, that's not good enough for us. Number one, we want our advantage lines to cross. Number two, we need a breakout from the channel. And number three, we need a green buy signal. Now, we have our advantage lines crossing. In this picture that you're looking at, the white line and the orange line are the advantage lines. If you'll notice, they have crossed. That tells us that the market sentiment, the psychology of the market has changed. And the buyers are starting to move forward, move the price up. They're looking to go long in this market. The buyers are starting to see that this same thing we're seeing, that this is the time. And so some of the early buyers are jumping in, but we don't want to get in yet, all right? We need these three things before we jump in the market. Now let's go on. Here we go a few days ahead. I believe we're 8 days ahead from where we were at. And we see there that we have a green buy signal. But if you'll notice, the green tick, it has a little left arm and a little right arm. The little arm on the left is the price the market opened at, and the little arm on the right is the price the market closed at. The top of the green tick is the high of the day, and the bottom of the green tick is the low of the day. Now, what we're looking for when we want to break out, we're looking for the close of the day, or the little arm on the right of the tick, to be above our violet red lines that we've drawn. We want it to be above the channel. It's not broke out of the channel yet because it's still closed inside of the channel. So we're not interested yet. Even though we got a green buy signal, we're still not getting in this thing because we're not out of that channel yet. So let's go ahead. 2 days later, notice, 2 days later we got another green buy signal, and this time it's on the outside. It closed outside of the channel. This is a good buy place. Now, we're going to be using trailing stops. You want to always use stops. Don't get in the market without stops. And we'll be looking to close out our position when the advantage lines cross back over. So we're in the market right now. We're going to be using stops, and we may get stopped out, or we may wait until the advantage lines cross back the other way, and then we'll get out. Okay, so let's go ahead in our market. We bought a position, and now we're moving on, and there is the market, and we got stopped out. All right, 49 days later, we got stopped out. We made $2,575. That's on one order. When I get into the market, I like to put on 3 orders, and you'll learn how to do that later, and you use different stop methods for each order, but that's a little advanced training. We don't want to get into that just yet. But in this program that I use, if you'll notice these little blue lights are trailing stops. They go up with the market, and they automatically protect my profits. Now here we see that the market turned around on us 49 days later, and we got stopped out with a trailing stop. And again, we made $2,575 profit in 49 days. Now if you put on 3 contracts, you can see how that would multiply very, very rapidly. Let's just take you here now. All right. For a free education in the commodity market, commodity trading, simply go to my blog, www.onlinecommoditiestrading.org. It's free. I don't charge you a thing. I'll teach you how to trade. I've spent thousands and thousands of dollars learning how to do this. I'll teach it to you for free. You might say, well, why would I do that for free? Well, number one, I'm a minister, and I am a Bible teacher. I love teaching what I learn. I live for that. Commodities trading is something I do on the side. I enjoy it. I really, really do. But I love teaching more than anything else that I do. So you're going to learn how to trade commodities, and you can do it without spending a dime if you just go to my blog. And when you get there, you'll be able also to click onto my Facebook side, and there on Facebook I'll give you updates every time a market is starting to move, and you can see what's happening or follow the market yourself. Thank you so much for watching my video. Remember, go to www.onlinecommoditiestraining.org and have a blessed day.